Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Global stocks kick off the second half, extending their record-breaking rally. Asian markets gaining after a new high for the S&P. Bloomberg understands the EU is willing to stomach Donald Trump's 10% universal tariff, but with some exemptions. The US president takes aim at Japan, meanwhile, threatening to ramp up tariffs over rice. Plus, Apple's serious problem. We reveal the iPhone maker is considering a radical move to outsource AI technology for its voice search function. Good morning, happy Tuesday. European futures pointing modestly higher after losses of about 0.4% for European equities by the end of the close on Monday. Today, looking to gain around 0.1%. Broadly, of course, across global markets, a strong quarter. The S&P 500 yesterday closing at a record high again, back above 6,200, above 6,200 for the first time, of course. And S&P E-minis currently looking a little softer, maybe a little bit of profit taking after the record highs that came through yesterday. FTSE 100 futures looking to add just 2 points so far in the session. Nasdaq 100 futures also a little softer by around 39 points, just pointing lower by 0.2%. Let's flip the board and have a look cross asset then. Yes, that equity rally has been pronounced. The Treasury rally is there as well. We saw fresh money moving into US Treasuries yesterday with yields down 420 right now on the US benchmark 10-year. Currently yields down 2 basis points, so bid again across the curve stateside as markets price in more than 60 basis points of cuts now by the end of the year from the Federal Reserve. September now fully priced by the markets. Euro-dollar at 117, briefly crossing 118 overnight, and you have seen that continuous strength, of course, for the euro and the weakness for the dollar. In the first half, it is the biggest drop that we've seen since 1973 for the greenback. $66 a barrel on Brent, down 0.5% for a second-day weakness in the oil markets, and gold up 0.6% at 3,324. Let's cross over to Asia right now and check in how the markets there are faring. Minmin Low standing by in Hong Kong, and there's a focus certainly on Japan given the swipe that came through from President Trump on rice and tariffs in that nation. Minmin.
That's right, Tom. Broadly green in Asia, but as you said, Nikkei 225 moving in the opposite direction. We got a negative headline today from President Trump threatening fresh tariffs on Japan for its unwillingness to import more rice from the U.S. Just a day ago, President Trump also complained about the unfair auto trade with Japan as well. So those fresh tariffs likely to hit Japanese exporters. And so we're seeing the Nikkei off by about 1% or so. But bear in mind, this is off 5 straight days of gains. And if you look at option traders, they're still positioning for a potential record high on the Nikkei. That's off the back of the Tenkan survey out today, better than expected. Large manufacturers actually holding out their sentiment despite the tariff levels so far. That's why we are seeing the yen moves today as well, gaining against the US dollar. That's likely to give the BOJ more confidence to perhaps hike rates maybe in July. We're watching the Governor Ueda's comments later today at the ECB summit in Portugal. If we hear some hawkish comments out of that, we could see the yen extending gains further, potentially setting the stage for a rate hike sometime soon. And flip the board, we're also checking the yuan today because we have seen euro yuan hitting the highest levels all the way back to 2014. And this is part of the dollar weakness story. We have seen Asian currencies, EM currencies, the euro rising, but yuan, if you compare it against its peers, it's not moving as fast as the others. So the PBOC is clearly controlling the pace in the rise of the strength of the yuan. And what it does is it gives a leg up for Chinese exporters. Could be a potential sticking point when Wang Yi is in Europe for his trip this week. But look what happens to the CSI 300 here. When Euro CNY is above 8, we tend to see Chinese equities get a big boost after that. We saw it here. We saw that here as well. And we are now set for a similar dynamic right here. So we could be set up for a big lift in Chinese equities in the months going forward if this trend continues.
OK, Bloomberg's Min low in Hong Kong with a check on the markets there and breaking down some of the things. Min, thank you. Now, Bloomberg has learned that the European Union is prepared to accept President Trump's proposed 10% universal tariff. But it does want exemptions for key sectors in return. The EU has until July the 9th to clinch a trade arrangement before tariffs on nearly all the bloc's exports to the US jump to 50%. Let's bring in Bloomberg's Oliver Crook. So, Ollie, where do these negotiations stand? What is the EU specifically willing to accept and on what terms?
Yeah, so now they're sort of dawning to this realization that basically this flat tariff, this 10% that the Trump administration has been talking about is basically something that is non-negotiable, which I think for many people was something that was actually pretty clear quite early on in these conversations. Now it seems that the Europeans have accepted this and are saying, OK, we're going to accept some kind of imbalance in this kind of arrangement, but critically we need some exceptions. One of the exceptions they're trying to find is they're trying to bring that auto tariff down from that 20% level, either through quotas or exemptions to basically have the effective rate be lower. But also they need a clear idea of what the future looks like for the pharmaceutical sector, what it looks like for semiconductors and aircraft. Those are the three sort of key sectors for the Europeans, because basically what you're doing is entering into a negotiation with something without the final price of what you're dealing with. So what they want to do is have a full picture before they agree to anything, and that's how the conversation is now going to proceed with the Europeans. And of course, this is about a week away, right? And we don't know how much the Trump administration wants to bring in other things like the digital tax. We saw what happened in Canada. France, UK, Spain, Austria, they all have digital taxes. Could that be something that comes in? So this is just basically something they don't want to have to negotiate several times in a row.
And the mood music has been more positive as we lead up to July the 9th by both sides. And maybe there's some kind of framework that they agree to before nailing down a full and more comprehensive trade arrangement. But give us the context, the size and scope in terms of what is at stake if indeed Trump goes for 50% tariffs, which he has threatened on those imports of EU goods into the US.
At stake is the biggest trading relationship in the world. I mean, we talk about it often. I mean, this is such a huge number that it maybe doesn't mean a whole lot to us, but it's $1 trillion worth of goods that go in each direction basically every year. What has been interesting is in the first 4 months of the year, the trade deficit that the United States runs with Europe has basically close to doubled. Basically, last year was $250 billion. This year, in the first 4 months, it was $115 billion. So it was almost half of basically the entire thing of last year for the only first 4 months of the year, because everybody has been shipping goods to try to get under the tariff barrier. Does that make it more difficult to have these negotiations? Because in the Trump administration's mind, this only sort of further gratifies the situation. In terms of what the impact of 50% tariffs could be, I mean, we talked to finance ministers in the lead up to all these negotiations. It's basically incalculable at this stage. But as you were pointing to, I think the most realistic outcome, if I were a betting man, is that they get a broad framework, they get a sort of consensus, sort of broad agreement, some happy noises, but the can gets kicked down the road a little further past July.
OK, bit of can kicking maybe in prospect as we look ahead to next week. Oliver Crook, thank you very much indeed, breaking down what the EU has been saying in terms of those negotiations that, of course, continue with the US as they lead up to July the 9th. Now, the US Treasury Secretary, meanwhile, has played down speculation that President Trump could name a new Fed chair early, suggesting a name may not emerge until October or November. But Donald Trump is continuing to put pressure on Jay Powell to lower rates.
The president sent this note to the Fed chair. It says, Jerome, you are, as usual, too late. You have cost the USA a fortune and continue to do so. You should lower the rate by a lot. Hundreds of billions of dollars are being lost, and there is no inflation.
OK, let's get more from Bloomberg's Valerie Teitel. Val, another broadside then against the Fed chair as markets increasingly bet on a dovish tilt from the central bank.
Yeah, that's right. That kind of sentiment has really led this Treasury rally to extend into a third week, about a dovish Fed shift within the FOMC pick that Donald Trump is likely to make. There was an interesting comment from Scott Bessent when he was speaking to Bloomberg yesterday on that. He said there are a few people currently at the Fed who are under consideration, maybe kind of foreshadowing that Governor Chris Waller might be one of those candidates. We know that Chris Waller has been one of the outliers on the FOMC, calling for the fact that inflation from tariffs is temporary, it's transitory, and the Fed should be cutting. He even raised his hand saying that the Fed should be cutting as soon as the meeting at the end of July. So that kind of speculation about a new dovish Fed chair has kept short-term interest rates anchored. It's also kept the dollar under pressure. And boy, oh boy, it's been a historic first half of the year for the DXY index. Its worst start to the year in nearly 50 years, since 1973. We're down over 10% on the DXY index, and this is having really cataclysmic effects here in Europe. Take a look at the winning streak that the euro is currently on. 8 straight days of gains, Tom. If we make it 9 today, it'll be its longest winning streak in 20 years. So some really big shifts happening in the FX space. A lot of this recently ignited by the fact that the market is currently pricing in a dovish Fed pick from President Trump.
OK, Bloomberg's Valerie Teitel. Yeah, even as we get mixed messages in terms of the timing around that announcement. Valerie, thank you. With the market breakdown and the eye continue. They be on the US dollar, strength for the euro, of course, and expectations around the Fed. Here's what else to think about today, then. At 10 a.m. UK time, we're going to get euro area, talking of the euro area CPI. So the inflation print out of the Eurozone at 10 a.m. We will get the context around that. The ECB increasingly suggesting that it is on hold now at 2%. But we'll see if the inflation data adjusts and changes that view. At 2:30 p.m, meanwhile, it is the Central Bank Governors Panel in Sintra. You absolutely want to tune in for that conversation, of course, hosted by Bloomberg's Francine Lacroix. And at 3 p.m, it is the US ISM manufacturing and JOLTS data. So a touch there on the jobs picture and manufacturing sector of the US, of course. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Coming up, Republican leaders in the Senate scrabble to garner enough votes to pass Donald Trump's tax bill. We will have the latest on a busy night in Congress. Live shots there of Capitol Hill. Meanwhile, later in the show, we will head to the ECB forum in Sintra, where we will be joined by the governor of the South African Reserve Bank. So stay tuned for that. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Senate Republican leaders continue to scramble for votes to pass Donald Trump's $3.3 trillion tax and spending bill as lingering intra-party fights threaten to upend the legislation. Senators voted through the night on a series of amendments to the bill, including proposed energy and healthcare provisions and clean energy tax credits. Joining me now is Bloomberg's Brian Fowler. Brian, how divided is the GOP at this point? What is our sense as to whether or not they can come together and get this bill over the line?
Well, I think it's safe to say it's going to be a long night at the Senate tonight for the Senate and for journalists trying to cover this. The GOP needs to convince 5 out of 8 holdouts to come around to vote on the tax and spending bill. 2 of those, Rand Paul and Tom Tillis, are definitely not coming around. So there's very little wiggle room for the GOP on this. And it's going to come down to debates, as you said, on issues, amendments related to clean energy. There's a lot to do with tax incentives and subsidies for wind and solar. And it's also going to come down to Medicaid. Susan Collins of Maine has proposed that the fund for hospital funding be doubled to $50 billion. She would pay for that by raising taxes on Americans earning more than $25 million. So it's going to be a lot. That's a hot button topic. By some estimates, under this plan, almost 12 million people would lose access to insurance. So that resonates with voters. And I think this is going to be a big test for Donald Trump on how he navigates this process and how he especially deals with these hot button topics.
Yeah, and he was back on social media just 20 minutes ago or so, urging Republicans to pass this bill. Brian, part of this, of course, is about the tax cuts, as you mentioned, but there's an effort by some Republicans to kind of mask the costs of these tax cuts. What's going on there?
Yeah, so this accounting method, current policy, allows the GOP to essentially count the extension of the 2017 tax credit that Trump engineered in his first term, to count that as costing nothing. And this allows the GOP to get around rules that normally would limit the fiscal impact of any kind of legislation that's voted on during the fast-track process, which is the case for this legislation. Economists still say that this is smoke and mirrors, that no matter how you count those numbers, the tax, it would still cost trillions of dollars, at least $3 trillion, maybe more, depending on how interest rate is calculated or how much provisions are extended. So it's considered something of a masking of the real costs of this bill.
OK, Bloomberg's Brian Fowler, thank you. We appreciate your time. The update, of course, as senators continue their working through, of course, of that bill and the amendments, and we'll keep across that story for you. Now, some of the stories making the news this Tuesday. Israeli forces are reported to have killed 74 people in Gaza on Monday. Witnesses and health officials cited by the Associated Press news agency say airstrikes killed 30 people at a seaside cafe, while 23 people were shot dead while queuing for food aid. The Israeli military says it's reviewing information about the attacks. Bloomberg has learned, meanwhile, that the Israeli Prime Minister is expected to travel to Washington next week. It is understood that Benjamin Netanyahu will meet the US President at the White House on Monday. Last week, Donald Trump said he thought a ceasefire in Gaza could be possible within the next week. President Trump has signed an executive order terminating US sanctions on Syria. The move is aimed at boosting the nation's struggling economy and supporting the new government after rebels overthrew President Bashar al-Assad last year. The order removes various sanctions as of today, while keeping those on Assad and his associates. Coming up, Bloomberg learns that Apple is considering outsourcing AI for Siri. We bring you our scoop. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's bring you a Bloomberg scoop right now. We have learned that Apple is considering using artificial intelligence technology from Anthropic or OpenAI to power a new version of Siri. It's a move which would sideline its own in-house models as it looks to turn around its flailing AI efforts. For more, I'm joined now by Bloomberg's Annabelle Drewlers, who covers, of course, tech out of Asia for us. Annabelle, why is Apple doing this then? What is the rationale for this potential pivot?
Well, I think the rationale is pretty well appreciated by the market. It is that Apple is perceived as being a laggard when it comes to AI. So, for instance, we've had the delays to the rollout of Apple Intelligence, and it's that really big question mark as to exactly what is Apple going to be doing to move the needle. So they have made some personnel changes, but what we're actually learning now is that they're also looking beyond doing this just in-house and any sort of team changes, for instance. They're actually looking at working with external parties. So you mentioned there the two names that we've been speaking about with sources. There's Anthropic, there's OpenAI, and what we understand is that they've asked both of those companies to train versions of their models that could run on Apple's cloud infrastructure for testing. But certainly if they do move ahead with this decision to work with an external partner, it is going to be in a big about turn, but it is going to be an important one because definitely they do need to make some shifts in this space as well.
Yeah, the catch-up is needed, isn't it? What does this mean for Apple's own AI team? They've been hiring, of course, and bringing in some expertise from outside, but they have their own internal team as well that arguably is under a fair amount of pressure right now.
Yeah, I think this is a really interesting thread that came out of the conversations. It's a really great scoop, and it's very much worth reading by Mark Gurman. But what is interesting that came out of it is just the personal impact and how people will feel, because there's this understanding that from our sources that the AI team at Apple could end up feeling maybe a little bit overlooked in this process, or they could feel like their work is going to be perceived as being, I guess, not of poor quality, but certainly not of one that is of industry standard. And so it's that big question, where would they go next, and would they be looking again to shift? I mean, Meta, for instance, we can get to this in just a moment, but Meta has been putting hundreds of millions of dollars into its effort to try and recruit people from companies like Apple. But it is important to note as well that even if they do go to a third party for this, licensing third party AI is something we already see from Samsung, for instance, is working with Gemini. We see from Amazon.com working with Anthropic for its Alexa Plus. So there is some precedent there as well.
Yeah, and look, you mentioned Meta and the talent hire from Meta. The attempt there has been aggressive, hasn't it, as you allude to. And they have announced now, they've officially announced, Bloomberg reported this out, but they've officially announced now this AI Superintelligence group. What does a group aim to do for Meta when it comes to AI?
I think it really just talks to the ambitions that Meta has in this space. And just to sort of recap or to finish off on that recruitment drive, I mean, they're obviously preparing to spend hundreds of billions of dollars on that, and that does involve getting the best talent. So there are things like paychecks, for instance, between 10, 40 million US dollars a year, sign-on bonuses. We're hearing people are talking about up to $100 million. So it's a very, very big ambition for the company to be able to develop superintelligence, and that's the name of this newly created effort, MSL, Meta Superintelligence Labs. What that stands for, what superintelligence actually means, is it's the evolution of AI. So right now we have AI, and this is talking about sort of chatbots. We are looking ahead to what could be AGI, or artificial general intelligence. We're not there yet either, and some people say it could take years, if not decades, maybe never possible. But AGI is when the artificial intelligence has cognitive abilities that are similar to a human. Artificial superintelligence, or ASI, means that you're moving beyond that, and you've actually got cognitive abilities that, or the AI has cognitive abilities that exceeds that of a human, not just on an IQ but also an EQ basis. And so this is what Meta says they're going to be really working toward. It is this new business line, essentially, that's going to be headed up by Alexander Wang. He is the former CEO of the data labeling startup Scale AI, and that's according to an internal memo. But still, this is someone that Mark Zuckerberg is calling the most impressive founder of his generation.
Bloomberg's Annabelle Drulis, thank you very much indeed. On Apple, its AI efforts, and Meta with some of those big ticket hires, of course. Alexander Wang, a billionaire, still in his 20s. Now, to some other tech stories to get you up to speed on this Tuesday. Robinhood shares soared to an all-time high after it confirmed Bloomberg's earlier reporting that it is making tokenized US securities available to customers, including in Europe. The company joins the growing push to trade US equities on the blockchain. The CEO says crypto has the potential to become the backbone of the global financial system.
We think in the future, crypto and traditional financial services will fully merge, and crypto will become the infrastructure layer behind all kinds of financial services, from payments, which you're starting to see with stable coins, to holding deposits, which has been the realm of traditional checking and savings accounts. So you'll have stable coins that pay interest in the future.
Meanwhile, Oracle shares hit a record intraday high after announcing a single cloud deal worth $30 billion in annual revenue. That is more than the current size of its entire cloud infrastructure business. The agreement is one of the largest cloud contracts on record. The CEO says Oracle has signed, quote, multiple large cloud services agreements. And Standard Chartered is reportedly facing a $2.7 billion lawsuit over the 1MDB scandal. The Financial Times says liquidators have filed a claim in Singapore, which argues that the bank failed to conduct the anti-money laundering checks required of it. The bank has told the paper that it will vigorously defend against any lawsuit brought by liquidators. Boeing says its CFO, Brian West, is stepping down. West helped orchestrate one of the biggest capital raises in US history last year to steady the plane maker. He will leave in August to be replaced by former Lockheed Martin executive Jay Malave. Let's get you an update on the markets then. We check in on futures after a fresh record high for the S&P 500 yesterday. Global stocks continuing to be on a tear. Today, a bit of a pause coming through. European equities currently largely range-bound. The 10-year yielding 4.20. Money continuing to move into treasuries. Traders are now betting on more than 60 basis points of cuts from the Fed by the end of this year. Currently 2 in terms of the basis point move lower on the benchmark yield. Euro dollar currently 117 on the euro. The single currency has strengthened, of course, through this quarter. And Brent under pressure on oil prices, down 0.5%. Gold getting a bid, up 0.8 on the yellow metal. Coming up, we will be live at the ECB Forum on central banking and Sintra for a conversation with the governor of the South African Reserve Bank. That is next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Global stocks kick off the second half, extending their record-breaking rally. Asian markets gaining after a new high for the S&P 500. Bloomberg understands the EU is willing to stomach Donald Trump's 10% universal tariff, but with some exemptions. The US president, meanwhile, takes aim at Japan, threatening to ramp up tariffs over rice. Plus, Apple's serious problem. We reveal the iPhone maker is considering a radical move to outsource AI technology for its voice search function. Let's get to the markets then, in the context, of course, of that fresh record high coming through for the S&P 500 and the lift to global equities. Across the picture then, European Stocks 50 futures pointing to modest gains of 0.1% after dropping yesterday. FTSE 100 futures looking to add 5 points. S&P E-minis down by 0.2% after the record high of yesterday. Nasdaq 100 futures looking to drop around 44 points. Let's flip the board and have a look cross-asset briefly. Money continues to move into treasuries on further bets around the Fed and rate cuts. 4.20 right now in the US benchmark 10-year. Euro dollar at 1.17. The dollar run, of course, in the first half has been the weakest since 1973. The biggest drop in the first half since 1973. Brent at $66 a barrel, and gold getting a lift this morning, up 0.8%. Now, ECB President Christine Lagarde says the central bank's updated strategy will allow policymakers to deliver more nuanced communication about global risks and uncertainties. The assessment is a response to the post-pandemic inflation spike that caught the ECB off guard.
Our updated strategy commits to ensuring that our policy decisions account not only for the most likely path of inflation and the economy, but also for the surrounding risks and uncertainty, including through the appropriate use of scenario and sensitivity analysis.
Christine Lagarde was speaking at the ECB forum in Sintra, and from there we are now joined by Bloomberg's Francine Lacqua, who's on the ground for us. Francine.
Tom, thank you so much. I'm delighted to be joined by Lesetja Kganyago, the South African Reserve Bank Governor. Governor, as always, thank you so much for giving us a little bit of your time to understand inflation and growth and some of the world dynamics. Are you a little bit less worried about inflation right now, given oil prices have settled?
I'm not sure that one would say that oil prices have settled, but we are comfortable with the inflation trajectory. I think the central banks have done a very good job taming the great inflation of 2022. What we didn't figure in our analysis was that there could be a shock, and that shock would actually come from policy in the form of tariffs. But there was also a shock that comes as a result of the geopolitics. You said that the oil price has settled. It had been all over in the past few weeks.
You're right. I mean, I guess the ceasefire between Iran and Israel means that there was a little bit of comfort in the markets that we wouldn't see the spikes that we feared in those couple of days where there was a real flare-up. Governor, can you tell us what this means for a possible rate cut in July?
I think that what you should worry about is what the inflation trajectory looks like. Then you will know where rates are going. I'm just one member of that committee. I do not know the views that everybody will be holding in the committee. You go into the committee with a view, and then you must be willing to be persuaded, because the other committee members would have different views. We have a fairly robust debate. What we have had so far has been that inflation has been contained at the lower end of our inflation target range, and this actually has given us an opportunity of what central bankers call opportunistic disinflation, which means that you use a low inflation environment to anchor inflation expectations at that level.
But Governor, for you personally, do you think there's scope to cut next month? This month?
Oh, no, come on. Francine, of course you know what the answer is. If you wait until the end of the meeting this month, you will know which way the rates are going.
Okay, I'm not very good at waiting, nor is the market, but we'll do that. Governor, look, the South African Reserve Bank has also made a pretty forceful argument for adopting lower inflation target, which has been undergoing a review. Is now the right time?
Well, this work has been done, Francine. when the framework was introduced, there was always an understanding that we are going to lower the target. We did lower the target, but there was a shock, and we made a big policy mistake by reverting to the old inflation target instead of explaining that we experienced a shock and that we will come back within the target. In 2020, the National Treasury launched a macro review, and part of that macro review included a revision of the monetary policy and the inflation target. And one of the recommendations was that the inflation target should be lowered to 3%. Since then, further work had been done between the Treasury and the South African Reserve Bank. Our teams had been working very hard. They are fine-tuning the final details, and they then make recommendation to the minister and the governor. What is in no doubt is that our inflation target range is wide. It is too high. It is out of line with our peers, and we could only, if there is a revision, the revision can only be lower.
So, Governor, when are you expecting actually for that to be finalized and presented to the finance minister?
Well, the work is being done by the team. It should be very soon that is finalized. I think that it is important. We have impressed on the team. There is an opportunity right now of using, as I had said, opportunistic disinflation, and that the sooner we finalize that, the better.
But, Governor, why absolutely make sure that you have the support of the finance minister? I mean, if you say that you're aiming for a lower target, that would also do the job.
Yes, it will do the job. But these things always work because you had mobilized the whole of government and society around the target. And this particular minister is a big advocate of central bank independence, is a big advocate of prudent macroeconomic management. And it's very important that he is on board and helps us articulate that and bring society on board with respect to lower inflation.
So it's more powerful.
It's more powerful.
Governor, when do you, expect to be away from restrictive monetary policy, given everything that's going on?
Well, in May, we presented, as part of our statement, we presented a scenario. And that scenario included what the policy trajectory would look like under a lower inflation target. And it actually shows that we would be able to have lower nominal rates as a result of the lowering of the target. And so there would then thus be a benefit. I think that as it stands now, where we are with policy is broadly in line with neutral. We are actually fairly close. I think that many analysts will say to you that if we reach a nominal rate of 7%, we are in neutral territory. So we are restrictive, but so are many other central banks around the world. And it just reflects the fact that we have got so much uncertainty about the trajectory of inflation, given the volatility that we had seen.
So do you also think of scenarios? It was interesting to hear the ECB actually in their strategic review giving, there are so many more risks that communication has to encompass, of course, all of that uncertainty going forward.
Yes, scenarios are useful, but they bring with them a big communication challenge because the public might look at a scenario, and if it is a scenario that they find attractive, they almost like say, so why don't you do things so that that scenario plays out? But for us as policymakers, the scenario just helps us say to society, to the public, that here is our baseline, but this baseline could have risks, and if the risks materialize, this is how we think the outlook or the future trajectory would look like. And it is a very powerful communication if appropriately used.
Governor, thank you so much, as always, for joining us on Bloomberg. That was, of course, as South African Reserve Bank Governor. And with that, Tom, I'm going to send it back to you in London, and we'll have plenty more throughout the day.
OK, Francine, thank you very much indeed. On the ground for us, of course, at Sintra, Francine Lacqua, and our live coverage, as Fran said, of the ECB Forum in Sintra continues throughout the day, including interviews with Bundesbank President Joachim Nagel, ECB Vice President Luis de Guindos, and Adam Posen from the Peterson Institute. And at 2:30 p.m. London time, Francine will host a policy panel with the world's top central bankers. We will have all of that live on Bloomberg TV. Terminal users can get commentary and analysis at T-Live Go. Let's stay on emerging markets right now, because emerging market bonds, stocks and currencies have posted their best first-half gains since 2016. It comes as President Trump's policies prompt a flight from US assets. Let's bring in Shamaila Khan, head of global emerging markets and Asia-Pacific fixed income at UBS Asset Management. Shamaila, thank you for coming into the studio bright and early. How much of a catalyst has weak dollar been for the flow into EM?
It has been an important catalyst, but I think even beyond that, the idea that investors are realizing they need to diversify away from U.S. and the U.S. exceptionalism story in general has been questioned, has also been a catalyst, combined with the fact that EM fundamentals have been improving and the technicals are really positive.
Do you expect the flows to be sustained into
Absolutely.
EM?
I think it'll be a multi-year trend.
A multi-year trend. Where are we in that multi-year trend? Just in the first innings?
Absolutely in the first innings. It's only really been a couple of months of positive fund flows. EM has basically had negative fund flows for most of the last 3 years, which is unprecedented, I think, in the last couple of decades. So we're coming off a period where investors have very low exposure to emerging market debt, and that will take several years to get back to any normal average exposure level.
Unpack some of the fundamental and structural drivers beyond the US dollar.
Absolutely. So I think one of the main things have been that emerging market countries have been pursuing better policies, and that has resulted in more upgrades from rating agencies than downgrades. The default rates in emerging market countries have gone down. In fact, there hasn't been a major default in EM country in the last year and a half. And basically, the lower-rated countries have followed, I think, the best policies I've seen in the last couple of decades, where their improvement in the most distressed countries has been the most dramatic, and many countries have emerged from restructurings and are recovering.
There was a line that really jumped out to me from your notes to us. The fact is, and I'm quoting from your notes, the fact is that today developed market institutions are weakening, developed market institutions are weakening, converging with emerging markets. Emerging markets often have better policies these days, something you just mentioned, but emerging market fixed income provides better yields than developed markets. Where are we in terms of that institutional realignment then?
Yes, it's interesting because people think emerging markets are emerging markets because they have higher debt levels. That is in fact not true. In general, emerging market countries have lower debt levels than developed market countries. The main difference has really been the institutional strength in developed markets versus emerging markets. And that's where I'm seeing the convergence. You've seen policy uncertainty rise in developed markets. There's been concerns about fiscal in many developed market countries, and all of that is really leading to that convergence.
Is there an underestimation of the potential tariff impact on the EM space as these flows continue?
No, it's actually interesting. There were a couple of things that stood out during Liberation Day announcements. First was EM countries, with the exception of EM Asia, really were not subjected to the high reciprocal tariffs. They were almost all at the baseline tariff rate, with the exception of Asia. But the Asian countries in EM that were exposed to the high reciprocal tariffs were really countries that were very strong externally and have the ability to use fiscal. The second thing that was important is the fact that EM currencies have appreciated versus the dollar. And that leaves emerging market central banks with a lot of leeway to be able to reduce rates, as we just heard, since inflation is not getting impacted, and they don't have to wait for Fed. So these are all factors insulating emerging market countries if tariffs end up being higher than expected.
So where specifically are you looking and you finding the greatest opportunities right now, the greatest value in terms of EM credit?
So EM high-yield sovereign credit is really where we've thought that the market has overestimated the risk. So, and it's really across the region. So countries like Sri Lanka and Pakistan, in Africa and Ghana and Zambia, in Latin America, countries like Argentina, these are generally countries that people perceive as higher risk, but they performed extremely well, and we think we still offer value.
Okay, high yield emerging market sovereign. I mean, Pakistan and Argentina are in quite different baskets. And I'm thinking, of course, of the policy agenda of Milei versus some of the uncertainty around Pakistan and the recent conflict with India. When it comes to Asia-Pacific, and you talked about the fact that it's a slightly different picture when it comes to tariff, higher tariff levels, but more fiscal firepower that could be put to play. What role does China play in that? How much exposure do you want to have to China given the geopolitics?
I think China has really played an important role. First of all, we've been bullish on China for the last year and a half or so because we think that the risks were overestimated. The government has been really implementing a very measured fiscal policy of injecting stimulus so that they reach their growth objectives, and they had plenty of firepower to deal with all this tariff noise, and we've seen that in the negotiation process. So China, in my opinion, is actually doing a great job with respect to macro policy. And I think that when investors are looking for places to diversify, it's absolutely going to be a beneficiary.
Are you going dollar denominated in China or local currency?
We are going dollar denominated right now because the yields are very low in China. But I think, as the story plays out and the economy is cyclically recovering, that is also going to be ultimately a beneficiary because a number of institutions will be diversifying their currency basket.
OK, Shamaila, really fantastic to get you into the studio and breaking down the opportunities in the EM space with expectations that this is a multi-year story in terms of the flows into EM, only in the first innings of this. Shamaila Khan, Head of Global Emerging Markets and Asia-Pacific Fixed Income at UBS Asset Management. Coming up, a year after his landslide election win, UK Prime Minister Keir Starmer is under pressure as he faces a revolt over plans to cut welfare spending. The details are next. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
There is this feeling the labor market is contracting.
There's some risk that layoffs are growing.
Medium-term outlook is the economy should be fine.
This Thursday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The weakening trend continues.
This is a trend. We're seeing declines.
If you're not with a job right now, it's harder to find a new one.
The June Jobs Report, Thursday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, UK Prime Minister Keir Starmer is working to contain a rebellion in his Labour Party ahead of a crucial vote on his flagship welfare policy. The bill has provoked widespread internal criticism and cast doubt over Starmer's leadership. Our UK correspondent Lizzie Burden joins us now with the details. Lizzie, how likely is it that this crucial bill then will pass? How close could it be? I say that the bill is crucial. Really, it's a test, isn't it, of Starmer's standing within his own party?
Absolutely, Tom. It could be the most consequential vote of Starmer's premiership so far. Now, it doesn't look like he's going to pull the bill at this stage. It does look like he's going to win it, but it's by no means guaranteed. And it should be guaranteed, shouldn't it, when he's got a historic, huge majority of 165 MPs in the House of Commons. Theoretically, he shouldn't struggle to pass this sort of legislation. But there could still be a significant rebellion. Some newspapers have been estimating 60 Labour MPs could vote against it. And there'd been even bigger doubts last week until Friday when he made this embarrassing U-turn. He wanted to cut disability benefits, but he had to make an exemption for existing claimants. That's going to cost the Treasury £3 billion at a time when the Treasury needs every penny it can get its hands on. Without that U-turn, though, 120 Labour MPs had threatened to kill the bill, and that would have been really damaging to Keir Starmer's premiership because this is flagship policy. The last time a bill failed at this stage was 1986.
Wow, 1986. What does it mean then? As you allude to, as you touch on, Lizzie, this is not the first U-turn for this Prime Minister, just 1 year in. What does all of this say about Starmer's own position?
No, it's the third U-turn, actually. We've had one on winter fuel payments for pensioners. We've had another on the inquiry into child sexual abuse gangs. And every time Starmer takes the credit for one of these costly U-turns, his Chancellor takes the flak. And it makes it even more likely that she's going to have to raise taxes in the autumn or that she'd have to break her fiscal rules. So it's putting Rachel Reeves and her job on the line here. We've already reported that some Labour MPs want to sack her and pivot the government to the left. But in any case, Tom, this political instability is exactly what Keir Starmer promised he would end. He's getting attacked from the left and the right by the Reform UK party, trailing them in the polls. And already Starmer's had to admit that perhaps in this first year in office, he should have had an eye more on the domestic ball than all the globe-trotting deal-making that he's been doing.
OK, UK correspondent Lizzie Burden on this crucial test for the UK Prime Minister. Lizzie, thank you. There's plenty more coming up. We're going to get you some latest lines coming through from US President Donald Trump, taking a shot this time and again at Elon Musk. We'll bring you the details. This is Bloomberg.
The Fed doesn't want to lower rates and appear to be kowtowing, if you will, to President Trump's language. On the other hand, I think there's actually room for them to lower rates. If you look at the Fed's Beige Book, which the Fed reacted to last year when they started lowering rates, I think there's room for them to take action now. And if I were the Fed, I'd start thinking about going ahead and lowering rates.
OK, a view there on what the Fed should do next in terms of those rate cut expectations that continue to build. Let's reflect on the trade story uncertainty. That is the yellow line. That is the Bloomberg Economics US trade policy uncertainty gauge. And that uncertainty, as you can see, has been moving lower since Liberation Day in April. Will that momentum be sustained on the trade front? It is a key catalyst for these markets right now. As we lead up to July the 9th and that deadline around these trade partners, you can see the S&P 500 with this crocodile mouth shape. As trade uncertainty moves lower, the S&P 500 punches higher with a fresh record yesterday. But will that continue into next week? It is a catalyst and has been in recent weeks for equities higher stateside. Let's flip the board and have a look at what this is all doing to the currency story. You do have the US dollar. First half, the weakest first half we've seen since about 1973, and that has lifted the euro. But euro flows as well. Flows into the euro have been marked. This then, the white line, is the Bund, the 2-year Bund in terms of the yield spread, and you can see it's edged up slightly. But that is euro strength right now that's come through. That could be sustained as well. And this is despite the fact that you have the ECB cutting 8 times, of course, from 4% to 2%. But that flow into the euro, 8 straight days of gains up until today. That is the longest run that we've seen in about 2 years and could continue again today. Bloomberg terminal users, by the way, can get these terminal charts, of course, on the terminal. I want to reflect on what's been happening in terms of President Trump taking a pot shot at Elon Musk. Just in the last few minutes, he posted on Truth Social, Elon may get more subsidy than any human being in history by far, and without subsidies, Elon would probably have to close up shop and head back to South Africa. Burn. Let's flip the board and have a look at the X1, because he talks about Doge potentially investigating Elon Musk's company. So watch Tesla today as that feud bubbles back up to the surface, with Musk, of course, taking aim at the big, beautiful bill. Don't forget, Bloomberg is hosting a policy panel, of course, around the ECB Sintra. The opening trade, though, is up next. This is Bloomberg.